And, oh my God, it's like working. Yes, I'm pretty sure it's working. Nice. All right. Stunning when there's no problems. All right, speaking of oil, we just got some good news. I was like almost going to bail on it because I'm down a lot, but I didn't because I have everything that you know me. Maybe you don't. I don't know if you guys realize this. You probably do. When I don't like how a position's going, my default mode is to walk away from the computer, go to my couch, and start reading. And I don't just read about the position. I read about, in general, I read all my articles, and that just gives me an idea of what's going on in the world to see if anything really changed. Obviously, if I see something about the thing I'm trading, that matters. Now, in this particular case, at this particular moment, we just a few minutes ago got some good news. So I had decided to keep it because nothing had changed since yesterday. And other than the expected report that was good, the expected the EIA report today, which we'll take a look at in a minute. The EIA report came in very nicely, and that was great. But we already got a great API report, and oil already popped on all this information. So why should it pop more? Where is the reason for it going higher than it is? What else happened? It turns out nothing happened, and then this crossed the wire. Let's see if I can find it. Aha! So Society General, which matters in Europe, says marketing. They cut their oil outlook, and we'll take a look at what it says. So they cut the 2017 price forecast to 50 from 55, so 10% downgrade basically, and that's on Brent. Now, where's Brent now? Brent's over 50 now. Boom. So Brent's at 50. Let's take a look at the hourly and see how they're doing. So that kind of put a stop to it. That's exactly what they did. They said it here, and it put a stop to the movement. Because I was, I've been hanging on thinking like I could take it to 49, but it's getting expensive. So I have like 10 contracts now. And I was not happy. Oh, I missed this. Damn it. I wanted to get back into natural gas too. So I was not at all pleased with what was going on. But then this is extremely encouraging. So they cut their price target to 50 from 55 and 218 to 50 from 60. That's a 20% downgrade next year. That's nasty. And sector-wide income estimates by 18.4%. In light of the new forecast, they downgrade BP to hold. And by the way, we got out of Exxon a couple of days ago. This is why I made the same determination as they did, and I decided it wasn't worth us having a long term on Exxon. I thought they were going to rebound. I thought oil was going to do better than it did, but after oil had such a crappy summer, and summer's halfway over already. Oil had terribly disappointing July numbers, never got to 55, let alone 60. So my premise for having Exxon long term was shot, so I gave up on it. All right, so that's the kind of stuff you look for when you're reading, though. That was at 12:49 that crossed the wire, and that was only 10 minutes ago. So great news. And not a huge effect on oil. Where is it? Here. Okay. So no huge effect on oil, but you can see right when it crossed, you can see like oil suddenly kind of gave up the ghost. And now people are probably sitting there reading this report and considering what they want to do. Now, I forgot to mute the people. Sorry. People fluttering around out there with their things, which is okay. It's not your fault. My fault for not muting it.
You are now muted.
So everybody's got, people don't even realize they have their little mics on their, built-in mics on their computers, and then they start doing stuff and everybody can hear it. Anywho, you know what? We were supposed to have Mike. We had Mike Canton, didn't we? Getting confused with if we have people or not. Been on vacation, so I'm totally discombobulated for what we did and what we didn't do. So I like Seeking Alpha because it's already curated and they do a reasonable job. So they're like pulling the important stuff. We show you the news readers that we use also, but that's like a fire hose. It's too much stuff. And then I go through these and I even further like knock it down and put up this. I only put up the stuff that actually matters to trading and matters to trading that we generally care about. So I'll pick out things that are interesting or something like that. Like, we don't care that Chubb beat. We don't care. Anthem is interesting because we were talking about Anthem in results for Express Scripts. Facebook TV, I don't know what that is, but who cares really? Roku, another, there's like so many of those things, it doesn't matter. And I'm not saying nobody's playing it. I'm just saying you got to be realistic about how many things you're going to pay attention to at once. Microsoft Cloud Container, that's interesting. Transocean, 2 rigs out of storage. What? Wow. Asgard drilling 2 well contracts in the Gulf of Mexico ending in August. The semi-submersible 2 well contracts in September. Both were idle. That's interesting. It has been, that's really weird. I would not have thought they would be pulling anything out of storage. I would think they'd be putting things into storage. So maybe a lot of what we're hearing about the drilling tapering off is not really true. Because who's hiring these rigs from $400,000 a day? Who's paying that to pull rigs out of storage if drilling is on the downturn? That doesn't make any sense. Analysts cut Seagate. Oh, poor Seagate. What else is important? Anyway, so I guess that's what I do. I go through the news. I read all these little articles, and then I decide which ones are worth putting into our thing. I also have other sources on my iPad. I read a thing called Flipboard, where I've got hundreds and hundreds of articles, and if I like those, I put them into a thing called. Let's see if I can find that. Flipboard. I'll show you how it works. I hope. Sign up. I don't have to sign up, do I? I just want to find Phil Stockwell. See, we have this Flipboard magazine, Phil Stockwell. And what happens is I take the articles, I put them into this magazine, and then this magazine is then in turn fed into the chat room. And that looks like this. Let's see. Was it in the morning was I doing it? No, I wasn't. I didn't do it this morning. I did it earlier. So if we look at yesterday's post, and there's another place they show up too. I'll show you. Okay, so here they are. They come out with a headline, and usually a headline and a picture is generally what comes out. But these are the articles that I read in Flipboard. This is my curated version. My own version of Flipboard has feeds from all these different magazines. So like when you see that something is from the Harvard Business Review or Salon or Zero Hedge or Pew Research, and The Guardian, I subscribe to all these different things, and I'm reading them. And then if I see something interesting, I put it into this, and this becomes those. And then those, in turn, flip into the chat room if I decide to throw it into the chat room. And then also, if you ever want to just browse the latest news, we have a section now called Market News. And now, not only me, but Eileen also picks up articles. If she sees something I didn't see, she'll put it into Market News, and that's just one of our sections on Phil Stockwell. So, point being that when a trade goes against me, rather than kill the trade, even if it's a day trade, rather than kill it, I will first generally go and do some reading. For one thing, it stops me from overreacting to something that's sudden, like when oil, like today, oil spiked up, and I was not happy, and instead of here, so oil spiked up sharply on the report, and rather than get out, which I was tempted to get out because it wasn't going my way, I walked away, I read, I did not see anything that made me want to change my mind, and I stuck with it. Then it went back up again, but now I knew I want to stick with it. And then right here's when that new article came out. Not that that's going to make all the difference in the world, but at least it gives me the idea that this is probably still a good trade. But that goes to anything. Same thing for now. If it's if it's, for example, Chipotle, you always want to first look on like Yahoo and see if anything actually happens. Although they're nowhere near as good as they used to be. That's why that service that we were looking at a couple of weeks ago is so valuable, because that tells you the second anybody, as fast as any hedge fund with a high tech news feed knows, you find out what's going on. It's good as having a Bloomberg terminal. And so if you see Chipotle move and you want to know why it moved, you put CMG in, boom, you see every single possible thing going on with Chipotle in 2 seconds. That is, if you're a day trader, that's what you need. For my kind of trading, which is generally longer term, or I'm almost never in a day trading position, I'm not willing to turn into a long-term position, but I'm perfectly happy just going to Yahoo and seeing like, oh, there's been nothing in 3 hours. I used to like the conversations on Yahoo, but it's worthless. These people are idiots. They're back and forth. People are pumping and dumping their own stuff. It used to be good, but it got bad really fast 10 years ago, and now it's just useless. Anywho, all right, so there's my opening comments, and let's see how we're doing otherwise. The markets are just drifting along, pulling back a bit. Nobody threw out. The Russell's red. That's good because I bet the Russell. We have short on the Russell, so that's good. The Dow, another pretty good pullback. We're getting a pullback here. The S&P failed at 2480, and this 5950 was our shorting line on the Nasdaq. But the European indexes had a pretty good finish. But in context, though, it's a 5-minute chart. In context, the DAX is really only weak bounce. It's only like maybe a strong bounce. Let's see if it's strong or weak. 12.6 to 12.2 is 400. So 80 points is a weak bounce. So all this is really doing is weak bouncing. And arguably, obviously, we were over 12.6. So pretty much, if you say this is a 450 drop, they're pretty much exactly at the weak bounce line here. So there's nothing going on really in the DAX that's very impressive. The Euro stocks, though, they made a 50% retrace, so they're in good shape. So it's really want to see whether, if these guys break lower, then that rally's over. If the DAX breaks higher, then that confirms this move. The Nikkei is meaningless, really, just kind of following the dollar and the yen. Russell, our indexes are just incredibly strong. You can't really be stronger than these indexes. There's not even you can't even say these are negative patterns. These aren't even toppy looking. They just look like a never-ending rally. Look at that. That is freaking incredible. Holy, more incredible than the S&P is the Nasdaq. And even the Russell, it looks like, it really, it just had this one little dip, and that was the last time it ever went down. I don't know why I'm playing that short. That's crazy. And look at the dollar. The dollar's helping a lot, right? That's definitely helping everybody look better than they are. But still, these are very, very impressive rallies. All right, let's see. Any questions? You won't sue. Uh-oh. Excuse me. Let's see. Where are we? All right. Good afternoon, blah, 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 blah. Oh, yeah, we got to look at the oil report. I'll do that next. Okay. All right, there we go. All right. Rig rate 220K, not 450K. So anyway, was that, didn't they? Well, whatever. The article said whatever it said, but. Do you think CMG is in oversold territory now? Oh, yeah, for sure. We took a very aggressive long on CMG. Look, I did the math. When? Yesterday? Let me see. I don't like doing regular. Yeah, I hate to do math twice. It's fun the first time, and then after that, it's tedious. Um, wait a minute. What is it? Wait a minute. Let's see. Control F and T-O-R-E. Or where did I do that? Oh, right here. Okay. So, see, because you guys don't realize it, I'm not doing everything in my head. I have to look all these things up. So when I say, I don't want to see flipping, but there's one store out of 2,000. I have to go to TNG, look up at this 2,000 stores. Then I say, who serve an average of 1,000 people a day. I had to go look that up. And then I say, so 2 million, that's just math. And then 100 got sick. I had to check that back. Blah, blah. And then I got my, and then I did some research. Then I did research to see how common outbreaks of norovirus were. And while I was reading this article, I noticed that 2,800 people got norovirus in California schools in May. And there was no national outcry about that. But anyway, so all that research that I have to do, it was just to write this one little tiny paragraph. That's why I say I don't like to do it twice, because like I did the research, I don't want to like start trying to remember the numbers. But anyway, so it's one store out of 2,000 where somebody passed on a virus that they had, because apparently that a worker had because they were sick and they came to work when they're sick, even though the store guidelines say you shouldn't do that. This is true in every restaurant in America, and people get sick every day, 3 times a day. In a restaurant, there's an outbreak of this stuff. One day this year, it was Chipotle, and their stock dropped like $2 billion because of it. That's insane. So yeah, it's oversold. It's completely illogical behavior. So I guess the best way to say it is this too shall pass, right? Just like that burrito. CMG. So, but certainly nobody believes it right now. They're getting just completely crushed, and it might take a while for them to recover. Which is what happened to them last time, right? They had this big crash, and they never really recovered. Not too much. I mean, they got back. They went from $3.99 where we bought last time. And they came back into like the 4s, and we were comfortable here, but because we played them where we're playing them now. We played a low trade where 420 was our target, and we cashed out on this one, and now we're basically doing the same play again. We got the same dip. I think it's even worse dip than last time, so we have a better position than we had last time. Last time we had a 370 420 spread. Now we have a 320 420 spread. I think it could be huge if it hits. Or maybe we have 370 again, I'm not sure. But anyway, the bottom line is it's a huge, huge play. And this is really, I mean, look, you can see for years this has been the right price for a bottom. They've had another food scare, and now people are not going to buy, and then they'll drift back up. We have 18 months for this thing to recover, so I like the trade we put on. I think it's just a real overreaction. Jeffries a lot of price target cuts, and Jeffries upgraded to a hold. Well, upgrade to a hold, well, that means it was a sell, but still. Yeah, everybody loves to talk. See, look, you get ratings, you get clicks. Kramer talks about Chipotle. It's a stock that like 30% of his viewers can relate to. So of course he's going to talk about it when there's a thing. And it's great to talk about a scandal and, oh my God, did you hear this and look at that and what's happening here. you know, it's news. It's just like anything else. They like to make a big deal out of nothing. But, you know, unfortunately, this big deal out of nothing affects people's billions of dollars of money gets taken away from people for no good reason. But on the other hand, for us, it's a huge opportunity to get in on a stock cheaply. Thoughts on Twitter going to earnings tomorrow? Strong since last earnings. As near as I can tell, they haven't done much. And Google's numbers, specifically the traffic acquisition cost. Now, don't forget, Twitter Twitter doesn't have self-driving car projects and doesn't have browsers and doesn't have virtual reality headsets, and they don't have notebooks and blah blah. You know, I mean, Twitter is just Twitter. And so the traffic acquisition costs are life and death for them. And so with Google giving a bad note, I certainly wouldn't make a specific bet on Twitter. We are long on Twitter, but we're so deep in the money, I don't think it matters. Where are we? Control F2 WT. Yeah, we have a 13.20 spread. So I mean, it matters a little bit, but I mean, you know, we have until January for them to hold 20. They might go down to 18 for now or something like that, but I'm certainly not worried about our position. So I wouldn't pull my position, but I wouldn't make any specific bets that expire short term on Twitter having good earnings. That traffic acquisition thing from Google is really, it's not good and it's not unexpected. And I don't think it affected them too much, did it? Yeah, they're still down. You know, look, it's not killing them. I mean, you have to put it in context. They started out here. This is 840. This is 950, 960. This is 1,000 something. So I mean, gaining 150 points, a 20% run, and they pulled back. And now they've made a normal pullback. Now they overshot the pullback. Almost 50 is about the 50% line, right? And then they're back, and now they're into what would be a normal. Well, let's see. 850 to 1,000 is 150. So a pullback for 30 would be weak, 970, and strong would be 940. So this is a strong pullback, the 940 line. You can see it worked, right? So on the whole, this is bullish for Google. So I don't think with Twitter, I don't think traffic acquisition costs are going to slaughter them. But I will say that they don't have a lot else to fall back on. And if they do have the same problems Google's having, they're going to get punched. And they already did. Because Google reported and they went down. So we'll see. But see, they've got the same kind of gain. They got 14 to 20. That's 50%. All right? So if this is a 6-point run, then your pullbacks are going to be pretty drastic. They're going to be $1.20 is a weak pullback to 1880, and a strong pullback for them will take you down another $1.20 is 1880, 1860, 1760. So here, and you can even see how that line is working, right? So this line here is their strong pullback, and they could go all the way down there and they'd still be bullish. They'd still be on the same bullish pattern. And you can see this thing's going against them, right? It's just curling over. This is curling over. That's a little toppy. So it's really to see how they could, and also that's the freaking $20 line. Of course, you're going to get a pull back off the $20 line. So many reasons that they could pull back here. It won't take much for them to go back all the way down to this 200-day moving average at basically 1750. Would I bet them short? No, I wouldn't bet them short. I think they're generally undervalued, but I wouldn't bet them long either because of what happened to Google. And look, of course, this is the problem with the maturing media. Okay, the reason broadcast TV didn't make a lot of money is because there's a billion broadcast TV stations competing for ad dollars. So they end up having thin margins on the ad dollars, basically. Google, when they started, could make up any number they wanted. They'd be like, yeah, 10 cents a clip. And I know they have an auction and blah, blah, blah. But the bottom line is it doesn't matter. The money doesn't mean anything because it, not even like 1/10 of people's ad budgets get spent online. So for these companies that are used to putting out a commercial on a CNBC, let's say, for $10,000, which might be shown to 50,000 viewers, so you're paying $2, you're paying 20 cents a viewer, basically, on CNBC. So when Google tells them it's 5 cents per page, or 5 cents per page or a penny per page view or whatever, that sounds great to them. They're like, holy crap, I reach 10 times more people. Now, generally the advertisers, as in the first 10 years of doing this stuff, they've only been putting out small amounts of money. Now, the advertisers are starting to hire, the same geeks that work at Google work at the advertising place, and they're running the metrics and looking at the numbers, and they're negotiating the fees and blah, blah, blah. So the traffic acquisition costs go up. You can't just collect whatever you want from the people who are advertising anymore. They're getting savvy, and they're starting to spend their money wisely. In fact, Greg just did an experiment with Google because he wanted to see if, like we do advertise on Google a little bit on Phil Stockworld, and Greg wanted to see if we get X amount of people who click in every week from Google. And he wanted to see if we double our ad spending, would it double the amount of people clicking in? Total failure. Did not at all happen, and we don't know why. It's weird. But because you would figure that, but I think what the problem is that the financial markets, there's only a certain amount of people who actually are looking at online sites and care about financial information. So there aren't that many people we're not reaching. I think they're aware of our existence at this point. So I think doubling our budget just annoys people more, just like shows the same people more and more ads in the stock world. Because I don't think there's that many people that we're not reaching. I think the entire audience of people who pay for financial publications in the world is maybe 10 million people. That's it. You guys, it's hard to realize. You don't realize how few people actually do trade stocks. People own stocks, but they don't trade them. And so for us to reach out and find active traders, there just aren't that many of them in the world. There's millions, but there's, but in the, you think in the whole world there should be more. There's not. Anyway, so the bottom line. So Greg, he used to work at a company that did online advertising and such. So he's one of those guys. He knows all the metrics. He could talk to the Google person in Googleese and knows the language and knows all the things. And the bottom line is he ran a test, and the test failed, and we know it failed, so we cut back our spending and said, no, it's not worth it. That didn't used to happen. People used to blindly spend money, and Google's numbers would go up and up and up. Now people are saying, hey, I'm not getting my bang for my buck here, I'm getting my bang for my buck here. So anyway, Twitter has the same problem, but also to some extent Twitter is now competing with Google on a more even playing field. Facebook is competing with Google on a more even playing field. Everybody's chasing after these ad dollars. Now, obviously, that's a problem, though, because that's, again, you end up tightening up your margins. So basically, we started off talking about Twitter. So I'm not surprised Twitter's pulling back. It was choppy anyway. It needed to have a nice, healthy retracement anyway. And because of the Google thing, I wouldn't trust it to not have the same trouble. And you short and Q is how far would you write it down until you cash out? Yeah, sometimes I wish you could just show clips right away. There's the Who Framed Roger Rabbit. There's the movie Who Framed Roger Rabbit, and he's stuck in these two guys are handcuffed together, and the rabbit's a cartoon, and they're handcuffed together, and for like 15 minutes in the movie they're handcuffed together. And it's incredibly difficult and causes all kinds of problems. Then the guy finally gets a saw to cut off the handcuffs, and as soon as he starts throwing the handcuffs, the rabbit takes his hand right out of the handcuff and walks away and watches him saw. And the guy's like, you could have done that any time? And the rabbit goes, no, not any time. He goes, only when it was funny. So, you have to see it, but it's like the concept is, that's the same thing for getting out of something. Like people say, when do you get out? What's your spot? What do you say? It's not like that. You do it when it's done. You have to just it's like surfing. You got to get the feel for it. There's no way you can say this wave is going to curve at this point, and I'm going to ride it for 85 feet, and then I'm going to turn in. It doesn't work like that. You've got to feel it out while you're on it. And the trick to the practicing is to get used to what you're looking for. Now, that being said, let's take a look at NQ and see how it looks. Like here with TF. I've been short on TF. My basis short is 1448 roughly. So I'm up here. This morning, it was down here. And I should have cashed out. If I was playing it properly, I should have cashed out at 1445. But I didn't feel like it was done. So I made a judgment call. I wrote it out. I totally regretted it, of course, because my $2,000 went away. And now it finally came back. Now this time, second time though, if it goes back over 1445, it really should stop out. But I think we're going to have a much better dip during the day. But you got to get a feel for it. And if you don't, until you get a feel for it though, I would really recommend using a tight stop. And a tight stop means, on this one anyway, if you come in at 1450, we got a nice dip. You come down to this line, 1446. And once you go back up to 1446.50, get out because you made $350, which is $350 a contract. Or I'm sorry, half of that because that's why we do doubles on these. They cut the Russell to $5 a contract, so it's only 175. But you make 175 a contract, you should be happy. Then it goes back up, and maybe you go back in, maybe you don't go back in. But the point is, get out, take the money. As soon as it stops the downward trend, take the money unless you have some reason not to. Now, my main reason for taking this $2,000 off the table is that I'm down $6,000 on oil, so I feel better if I took $2,000 off the table on the Russell. That's all. Oh, it's natural gas. Nobody reminds me. I want to add those natural gases. What the heck? So let's go NG. Oh, but in NG, we decided H8. We're all the way up to the March contracts now. And I missed this, but I'm just going to pick up one so I keep an eye on it. I'm going to be cheap. I'm going to try to get it for 187 because it's not an emergency. Now, I'm the only guy bidding here. One guy's selling and one guy's bidding. Let's see who bids first. So I want it down here. Look at this. I mean, that's a lot of money. So I want it down here, and even if it goes lower, I'm going to be happy to add more. I really want 2, 3, 4 contracts, but if I'm going to get one here, and I could care less if it drops 5 cents, I'll be happy to buy another one. So we will see what happens. Now 48 people have lined up with me to buy. I started a whole thing. Is that you guys? That's not nice. You wait till I fill, and then you can go in. What else is happening here? We got gasoline. Very tempting short here at 161. Very, very tempting. Dangerous, but tempting. Silver was down in dumps. Gold was down a bit. Coffee. Whoa! Coffee. That's my thing. I got out of coffee over here. Around here. I took this money and ran on coffee. And it popped up on me. I'm pissed. NQ. We're going to look at NQ, right. All right, let's get back in here. Active Trader, and we'll switch this to NQ. So, you can see I'm another $80 while I'm waiting, so I'm glad I didn't do it at the moment. All right. So if you're playing NQ, and we were trying to short right at 50, the 50 line, right? All right, let's blow it up a little bit. Oops, maybe too much. There, okay. So we don't play over, we play when it comes back down. So you play it here, you have this little run down to 40. I could certainly forgive you for this, these are very quick spikes, so maybe you didn't get out. But then it goes back over, And, frankly, for me, if it's not 5 points, now 5 points is a $100 loss per contract. But if it's not breaking the 55 line, I'm going to stick in it because it's only $100 a contract, and I certainly expect to make more than that on the way down. So you go down, you almost get $100 here up, but then it goes down $100 on you, comes back down here, comes below the 50 line. Now, at this point, I expect it to go down and stay down, and it does. It goes down, it tests the 50 line, and it comes back. But now I'd be nervous, and I'd be taking that. This is $200 profit. I'd take that and run. When you test the line and it goes back to 50, so you're up 200, you're back to even. Now you're up 200 again. Get the message and take the 200. You can always look for another index to short. You don't have to only short the one thing. It's not your only opportunity. So if everything is going down and you missed the one you were on, go look for the next one to short. See, and I just lost $100 while I was talking about that on the Russell because I knew I should have taken it off at 45. So I'm looking at the NASDAQ. It's not really moving. So now I'm going to start looking at other things. Oh, I never got my fill here either. Damn it. All right, too bad. Not paying the extra penny. All right, so ES. Now, so I say to myself, why is the and let's look at the dollar at the same time. So, again, outside of news is important too. But outside of news, what's moving the market? Well, the only reason that I see, he didn't really make much of a bounce. He made a little bit of a bounce off 45, but he bounced off his pink line, the midpoint of the chart. So that's not really, maybe he only went up because the S&P went up, and the S&P only went up because it hit his pink line. He already failed his pink line. Oh, and speaking of fresh horses, he failed his pink line, or he's failing his pink line. If we go to look at the Dow, so if these guys are below, if he goes below his pink line, I'd go for the Dow for short because he's the furthest away from his pink line. So if they're all starting to head down, he's the one furthest away from it. He's going to make the most money if they all cross their pink line. Not complicated. That's what and that's what I call shorting the laggard. You want to pick the one that's behind the other ones going the direction you go. So when two of them cross at least, I'm going to look at the other ones and pick a sign. And then of course if I'm taking the Dow short here, then if either one of these guys cross back over their pink lines, and the S&P isn't under it, so I wouldn't do anything right now. But if either of them cross over their lines, then I'm going to get out. Now he's really in between on the fence. He's really on the fence about this thing. I'm blowing him up to watch it really closely. So now that I'm looking closely at it, I'm saying, okay, you know what? Maybe this would be my stopping point. So if the S&P goes up over this 2475, and I'm even going to drop it down to 2475 even. So if I see 2475 on the S&P, I'm going to get out of my Russell short. Because that's kind of a bad sign. Because the good sign is that it's staying below this line. So 2474.50. So what I want to see is I want to see this thing working its way down. Otherwise, I should take my money and run on the S&P, on the Russell. Because if not, and if I'm wrong, if I take this money off the table and I realize it was too soon, all I'm going to do is flip to the Dow. It's the same $5 a contract, and it's at a much higher point. It's got a lot further to fall to get to the same spot and catch up with the other indexes. So you see how he's going green like that? I don't like that. So I'm going to get out of this guy while I still have my bonus money. But if you wait too long, it's harder to fill. See, I'm getting all my fills now. Boom. So now I'm out. I've got a $2,000 even profit, so I'm happy about that. And if I was wrong and he turns lower and he turns lower and he turns lower, I'm going to short the Dow. I already have a plan. So there's no harm at all in me taking $2,000 off the table. But you see what's happening? He's going up still. He's making a fatter candle. I don't like the way this is going. I'm not comfortable that this thing is going to keep going down. And if I'm not comfortable, if you're not comfortable and you've got $2,000 on the table, take it and go. It's hard to teach people. It's so hard to teach people to take a profit. Because you make a profit and you start imagining, oh, if I get a bigger profit, if I get this, if I get that. Just take the profit. Then you can start working on your next profit. You've got to build up. The part of it is a lack of confidence that you can do it twice. Which obviously I don't have that problem. But you have to have confidence that you can just do it again. It's not a big deal. I made $2,000. Okay, great. I'll make another $2,000 next time I look at something. But that's all it takes. You've got to have you have to have a discipline to stop. You have to take a loss. You have to learn how to take a loss and learn how to take a profit. And when you start trading futures, and I mean when you start trading, like the first few years of trading futures, that's what you should be concentrating on. Quick profits, quick losses, try to win more than you lose. End of story. If you always take $50 and $100 losses and you get out because you were wrong, you don't know why you were wrong, you just get out, fine. And if you always take $50 and $100 gains, but occasionally you make a $200 gain, you make a $500 gain, just if you happen to be lucky, right? If you have a discipline and you set your stops, you can be lucky sometimes, but you shouldn't be too unlucky. It shouldn't happen very often. You're unlucky and you blow your stop. So if you win more than you lose, that most of the time you win and you're even. You win, lose, and you're even, right? With $50 and $100 here and there, or whatever. So that'll work out even. Once in a while, you make an extra $100. Let's say one every 10 times, you'll make an extra $100. Well, that means if you play 10 times a day, you'll make $100 a day just by being 50-50. Now, if you can get yourself to be 60-40, you'll make $200 a day. If you can get yourself 70-30, you'll make $300-400 a day. And by that time, you're ready to up your bets to higher numbers, and you can make $500, $1,000, and $2,000 a day. And you make it $2,000 a day, that's $500,000 a year. But I'm not talking about, today, tomorrow, the next day. I'm talking about years of practice, of doing it and setting a discipline so that in your sleep, so that while you're giving a webinar and while you're talking to people, you're saying, oh, I got to take this off the table. Based on this little tiny squiggle here and that little tiny squiggle here, I'm going to say I don't have confidence in this one, and I was right because I got out over here. It's not worth taking a chance when you have a profit. And again, I did take a chance because I've been doing this for years, decades now. So it's a little different when I'm looking at it because I'm looking at like broader patterns and thinking of other things. But when I started out, I would have gone bankrupt if I had that attitude. And I knew this morning, frankly, in fact, I would have made more money if I would have been good and I would have taken off over here. I would have made more money because I could have taken $2,000 off here, and then when it went back up here, I could have gone short again and made bonus money. So again, being trigger happy, getting your money off the table, you can actually make more money than just letting it ride, because you can play these little channels over and over and over again. All right, so let's see if you have a question or anything on that. Nope. Which has more potential shorting, TF or CO? Well, that makes no sense. It depends on the situation and time and whatever. At this moment, I think the Saudis are still going to look. I think between now and the first quarter, the Saudis are going to constantly be doing everything they can to get the price of oil higher. So it's always going to be a dangerous short. But on the other hand, the Fed is going to do whatever they can to get things up. Oh my God, the Fed! Holy crap, we got work to do, guys. All right. First things first. I am, by the way, drinking the best iced tea, which I made myself from tea I bought in Camden Market. It was like a flea market in Camden Town in London. and this girl has a little tea shop. And I'm talking like it's a flea market. I mean, but a more permanent kind of flea market. And this girl has a little tea shop in London. She won't tell me where she gets her tea. It's all proprietary. And it's so freaking good. I'm so annoyed. I get very annoyed by it. She doesn't do mail orders. I think you have to only go there. So I have to fly to England to get tea now. But it's so delicious. Where are we? I like to do like import-export business because there's so many places. I do this all the time. You go around the world and you find these really cool things that nobody else has. It's really kind of a fun business. Okay. So first of all, let's look at the petroleum status report. So the 1 o'clock is the biggie. And Control++. Okay, great. So we had a 7.2 million barrel draw, and gasoline was down 1 million, and distillates was down 1.9. So that's 7.2, 8.2, 9.1, 10.1. That's a fantastic draw. Why? What happened? Well, first of all, input to refinery is flat. Refinery utilization was up. So here, this is interesting. If the input to the refineries is flat, the same amount of oil is going into the refinery. But the refineries are using 0.5% more oil. That's a percent, not thousands of barrels a day. So out of 21 million barrels, 1% would be a couple of 100,000 barrels. 2%, so 0.5% is about 100,000 barrels. So about 1 million. That difference there is about 1 million barrels during the week that they draw down simply because the refineries are operating at a higher capacity level. So they increase the capacity. They suck more oil out of inventory without actually buying it. It's coming out of the inventory at the refineries. So the production, I don't see how the utilization increase in the production is the same. That's a little weird, but that's what happened apparently. Or maybe they're just ramping it up, and that's how they measure it. Now, oil has gone down 7, correct? Motor gasoline down 1, distillates down 2. Other oils up a little bit. So there's where 1 million barrels went, is that way. Oil in the SPR flat. Total oil draw as we expected. Now, what have we been doing? In exports. Exports are still huge, but no worse than last week. But still, we exported 2.5 million barrels a day. So that's 14 and half of 7. Yeah, so about 17 million barrels we exported last week. That's an entire day's worth of oil we exported. So that's where it went. Because notice, we're not using more gasoline than last year. We're just exporting more. So the entire draw is based on the exports. We're using a little bit more distillate than last year. 500,000 a day more distillates are being used than last year, not than last month, but than last year. And all other products also 500,000 more. But what are we doing with them? That's the point. This is what's being supplied by the refinery. 500,000 more distillate, 500,000 more other products, and how much more are we sending out? 1 million more. So the demand in the United States is the same, the exact same demand in the United States for these products as it was last year. So where was oil last year? 722.16. That's an important thing to know, right? Whoops. That's not the right thing. So last year in July, oil was right where it is. Here, $50. And what happened after that? It went down a bit to 45, then it went up, and then it went down, and then it went up. Okay, so basically we're right in the middle of the range where we were last year, where the United States is consuming the exact same amount of oil it consumed last year. So there's nothing here. It's an iffy place to play, basically. You know, my attitude is that if this is the best they can do, based on the OPEC and everything else, it's not. I think there's some weakness there, so I'm looking for it to still pull back. I think that, and maybe not this week because it's early in the cycle, but I'm looking for a decent pullback at some point. So where's the, now my basis is 48.36, which is down here. It's not really, because that's my loss is 65. So 65 cents from here. Yeah, about 90. So basically, this pink line is where I need to be to break even. If I get back to this pink line, and I missed it here at 10 o'clock, I should have gotten out there. If I get back to this pink line and get even, then I'll drop back down to a couple of barrels. I'm not looking to be giantly short on oil. It's not the best time to play it short. All right, so we talked about that, and now we should be ready for the Fed. Fantastic. It is 8 minutes to the Fed. Look at the dollar. What's the dollar doing? Nothing. Still hanging around the 94 line. So why are we looking at it? Long term, it's kind of, I believe this should be a pretty good floor for the dollar. Very much depends on what the Fed does right now. Here we are. I mean, look at this chart. 94. Look what happened last time it was at 94. That's a lot of money. You make a lot of money on a long bet there. Weekly? That's the only dangerous thing. If we fail here, and we go back to here. But how are we going to go back to here? Because the euro is going to become unbelievably strong. This is a 20% drop. So are we underestimating the power of the euro by 20%, or the British pound, or the mighty Japanese yen, the frickin' Kuroda and Abenomics and everything? No. So what, on what basis? This is the thing. That's why I only got charting, because, what's the chart tell you? The chart doesn't tell you what's going on in the world. Unless the Fed drastically changes their tune in 5 minutes, we're tightening and nobody else is. Draghi's not tightening. Kuroda's not tightening. China's doing whatever we do. Australia's not tightening. Who else is there? And nobody else counts. Both the other things don't mean, they're like fleas. So I don't see it. Okay, I just don't see why we should be below this level. And more likely, I think we should be in, closer to or towards 100. If the Fed surprisingly tightens now, this thing's going to play. Why would I not be long? Because if the Fed surprisingly tightens now, this thing can go flying. So here, let's add one ahead of the Fed and see what they do. All right, so 93, 94, we're going to take a chance because the bonus money is going to come in if the Fed tightens. It's going to be a huge bump up. So we'll see what happens. And if not, then probably down a little bit, but not much, and it'll survive. So it's a low, it's a good risk. It's a high risk, high reward, low risk kind of play. Oh dear, get my brain in gear. Venezuela ban, will that cause more oil draw in the future? Yeah, but yes and no, because they're going to sell it to someone else. If they're not selling it to us, they're going to sell it to somebody else, and it's going to end up somewhere. It's not like nobody wants oil. So in fact, it could backfire because we're currently exporting to several people, right? We're exporting 2.5 million barrels a day. What if they started bidding more for the 2.5 million that we're exporting? So, so you can't be sure about which way it's going to have an effect. And also, you don't know who you're buying your oil from. Bit of a fallacy. It's very hard. Like when Iran was selling, Iran was blocked by how many years they sold all the oil they had. And the dollar, they don't have Trump. That's true. There is a global lack of confidence in the United States of America. It is unbelievable. It really does. It's just an amazing, amazing thing that this country has gone from like the envy of the world to oh my God, you guys are messed up. All right, so waiting for this thing to fill in. It's going to say statement at some point. And I'm going to listen to what they say on TV. They have it not there. They have it before me because they get a pre-release. Let's see what he says. So in fact, why don't we just watch what happens? Ooh. What was I going to switch to? The Dow, right? Damn it. Everyone's breaking down now. So, as I said, all I do is get a fresh horse. 1, 2, 3, 4, 5. Okay. 5 is good. There. All right, so now I got 5. So now I'm 5 short on the Dow because we determined before the Dow would have further fall than the other guys. And we'll see what happens. So basically now I'm pretty heavily invested, though, in a down move. Because I've got the Dow short, I've got oil short, and I've got the dollar down. So I'm expecting the Fed to hike or at least have language that indicates they very, very, very much intend to hike. So we'll see what happens. But that's what I mean by fresh horse. Yeah, out of the Russell. It went down a bit. The Dow wasn't down as much as the Russell, so I'm shorting the Dow below this red line. And I'm hoping the Dow goes to this pink line. Now, how much is the pink line? Is 2156. So this is 63. So it's about 60 points. I have 5 contracts, 30, about $1,500, I think. All goes well. And I'm also hoping, of course, that this line provides some resistance on the way up. So even if the Fed does something the Dow likes, I have a chance to get out quick. They're saying they don't expect the Fed to change many of the words. And everybody's really expecting basically the exact same statement we mentioned. Oh. Well, they actually said they're going to start normalizing balance sheet relatively soon. They did not change rates, but they did strengthen the language. Still, not what I wanted, so I'm going to get out of this with a small loss if I can. Wow. See, that's not filling. Cancel 2 orders. $500 down the tubes. It'll be a lot more than that if I don't get out of these. Oh, wow. Getting burned. 670. Okay, because my premise was that they were going to raise rates at this meeting. They didn't raise rates at this meeting, therefore I shouldn't stay in that trade. I don't mind the dollar because I don't mind being long on the dollar with a loss here. Fortunately, I took that 2,000 off the table. I gave 700 back, and now these indexes are going to go up. Now, if I didn't care, I'd go long on something, but I'm just perfectly content that I got out and made a small thing. So now he's got to watch and see what happens. So we'll take a look at the actual statement. Let's see what else is happening. Oil probably popped up a little bit too. Yeah. All right, so let's take a good look at what the Fed said in their meeting, in their statement. Now Yellen's going to probably talk also. Whoa. Information received from the Fed. All right. Indicates labor market continued to strengthen. Economic activity is rising moderately. Job gains solid on average. Unemployment declined. Household spending. Household spending and business investment have. Oh wait, check to make sure it's the right one. Yeah. Household spending, fixed investment continue to expand. On a 12-month basis, overall inflation measure, excluding food and energy, declined, and they're running below. So they want to see. Here's their excuse for staying flat, because on a 12-month basis, they're below the 2% target. Market-based measures of inflation compensation remain low. Survey-based measures of longer-term inflation expectations will change. So in other words, inflation is low and staying low, and people don't expect it to go higher. Consistent with the mandate, blah, blah, blah. The committee continues to expect with gradual adjustments, they will eventually get the inflation in gear. Labor market conditions strengthen. Inflation is expected to remain somewhat below 2%. Near-term risks are balanced, but they're monitoring inflation developments closely. In view of realized expected labor market conditions and inflation, the committee is maintaining their target rate at 1 to 1.25%. They're accommodated, thereby supporting some further strengthening. Determining the timing and size of future adjustments in target in the federal funds rate, committee will assess blah blah. It's constantly 2%, 2%, 2%. This assessment will take into account a wide range of stuff. Blah 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 blah. Committee is carefully monitoring. Committee expects economic conditions to resolve in a manner that will warrant a raise in rates. Likely to remain below levels, prevail, however, past federal law. All right. For the time being, the committee is maintaining its policy of reinvesting principal payments from holdings of agency debt and mortgage in securities over and rolling over maturing treasuries at auction. This is a huge amount of money, $60 billion a month they're maintaining. The committee expects to begin implementing its balance sheet normalization program relatively soon. Now, the next meeting is in 6 weeks, and after that there's a meeting in November 30th, so another 6 weeks. So it's relatively soon, 6 weeks or 3 months, or are we into December? Well, that is 3 months. So I don't know what relatively soon means. That's interesting. Provided that the economy evolves as anticipated, so in other words, providing inflation is 2%, providing that jobs is still very good. This program is described in June administrative blah, 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 blah. Voting there's no dissent? No dissent. They all vote. That in itself is dovish. Not one person thought that they were making a mistake by keeping rates this low. So on the whole, it said, yes, it's generally a dovish statement. And how's the reaction looking? So we're heading back towards the highs. Now, if you wanted to go long, you can go long on the Russell because it's just coming over the 1445 line. But I still think that there should be some sort of a sell-off. So I'm not really enthusiastic about going long on this thing. I'm just going to keep my $1,300 and sit back and watch what happens. I think that's my plan for now. Isn't VA a big part of the why? Yeah, Boeing is like all of the all the Dow moved today. Boeing is up how much? No, it is not up $18. Holy crap. Yeah, $18 times 8.5 is more than the Dow. 18 times 8.5, 153. So 153 of the Dow's 75 of the Dow's 100 points is Boeing. So yeah, the entirety of the Dow's move today is Boeing. That is a big move. And so because the Dow went up, everybody else went up, and that's why I don't think any of this is really deserved. But clearly, the Fed was dovish. I mean, that was a good dovish report, very good for the bulls. So it's nothing to really short over. Although technically, at this 50 line, I still like the Nasdaq short. And I certainly like the Russell short at 1450 again. So I will get back in the Russell short here, more so than the Nasdaq. Although with the Nasdaq, we do have Amazon earnings tomorrow night. So if I'm lucky and we have a sell-off in Amazon, that could be nice. But we don't know what's going to happen. All right. So what else we got going on? So let's take a look at how everybody's doing. All. Silver all the way back down to 16. Holy cow. Oh, wait, what are we looking at? It's weekly. Funny. I was thinking like silver hasn't been 16 for a while. All right, so where are things right now? So this is 100% Boeing. In fact, let's take a look at the components of the Dow. Options, holdings, ML. So let's look at the Dow, stock by stock. That means the rest of the index has to be dragging it down. Components. So what do we got? 3M is down 4 cents. So these is nothing. Look at this, no movement at all. Down 4, up 6, up 3, down 16, up 10, up 20, down 25, down 13, up 78, 58 cents, down 4, down 58, down 43. Everything's negating everything else. Up 41. Oh, wait, where's it going? Oh, these things aren't in order? How weird. Boeing's all the way at the bottom. That's weird. Up 18. So, minus $2, McDonald's. How did McDonald's go down? They had great numbers. Oh, my God. This is so weird. McDonald's had a nice, solid report. Cisco minus 43. We just bought them. Verizon. Chevron's up a little bit. Coca-Cola's up a little bit. They had a good report. Nike's down. DuPont down. IBM down. Boy, they keep getting killed. Travel is down. GE. Oh, the IBM guy just called me too. I don't know what to ask him. I read that report. It wasn't that interesting. They want me to interview them. Caterpillar down. Merck down. Walmart up a bit. Goldman Sachs up nicely. J&J down. Apple up. Apple is really cranking right now. Disney, Exxon up a little bit. JP Morgan is down. UTX is down. United Health is up. Pfizer down. Microsoft down. By the way, United Health, well, not United, it's not United Health, but down in Florida. Been talking to people down in Florida. A lot of people are getting out of these nursing homes. They can't afford them anymore. People are cutting back. And there's a couple of factors. First of all, the Social Security, the money from Social Security doesn't keep up with payments, and it doesn't cover their expenses. So these people are trapped in these. imagine like eating that horrible food like every single day, and you can't even afford to go to a restaurant anymore because you're not getting any kind of increases in Social Security. That's problem number one. Problem number two, their kids are running out of money. So like my mom, thank God, is not in a nursing home, but she's 75 years old. I'm going to be 55 next year. So most kids have more than 20 years between themselves and their parents. So I'm going to, or 21. My mom would want me to say 20. It's 21. Scandal. Anyway, so they figure most kids their parents are 25 years old, and so that would make my mom 80. If my mom was 80 and I'm 55, then I'm retiring in 10 years, theoretically. So it's hard for me to keep supporting her and sending her money if I'm running out of working years. I'm saying as a regular person, not me personally. So I could see where this is becoming a problem, and it's going to become a very big problem because this is exactly what's happening. The boomers, my age, are getting into their retirement years, and they simply don't have the money to support these expensive nursing homes. And you got to figure, especially where you have most people have a couple of kids, 2 kids, 3 kids. You're talking about $4,000 a month for these nursing homes. Plus, you want and even if it's just the expense money, even if it's just $1,500 a month, and you're all sending your mom, like you have 3 brothers, and they're sending their mom $500 each a month. That's a lot of money. For regular people, that is serious money. So it's hard to maintain that lifestyle. And it's funny because you don't think of it as being a luxury lifestyle, a nursing home, but it is a place where everything is taken care of and everything is it's like living in a bad hotel. Interestingly, my mom has several friends who have moved. Basically, they've moved to cruise ships because you can actually live on a cruise ship cheaper than you can live in a nursing home. And the doctor's free on the cruise ship, and the food is free, and the entertainment is free. And all they do is just endlessly take cruises. And it costs them like $2,000-$3,000 a month to just constantly be on a cruise ship. You get a crappy cabin, but they don't care. If you get a crappy room in a nursing home, it doesn't make a difference, really. There's no electricity bill, no water bill, no insurance, there's a lot of advantages to doing it. It's interesting because I think some of these ships should maybe consider, because if they dry dock the ship and maintain the concept of if they maintain the concept of a cruise ship without actually going anywhere, I think that would work. I think, or if it only once in a while went places, like let's say if you had a cruise ship home, a nursing home cruise ship, and you took, what do you get? You get like 5,000 people on a ship, basically. So you have this cruise ship nursing home, and you keep it in Florida when it's warm out, but in the summer you go to New York, and everybody can see their kids. I think that would be a huge seller, and then people can pay you monthly instead of the nursing home. Good business, and we should do it. But that's one thing that's happening, and otherwise people are just flat out leaving, and people are moving in with their kids. People are getting small apartments near their kids. Their kids are moving them up north. My mom couldn't possibly live up north. If it goes below 60, she starts freezing. But I guess some people don't mind. I don't get it. I'm I guess from all my years of skiing, it doesn't bother me. But it's an interesting trend that's going to change a lot of stuff. And it's not obviously Florida's not the only retirement community in the world, but that's one, people from New York and New Jersey, a lot of parents go to Florida. But it's an interesting demographic shift. But it's still, in my mind, that's a reflection of the fact the economy is not that great. And you can see it here. The only reason Dow is up at all is because of one company. Boeing had a great day. If Boeing didn't have a great day, the Dow would be negative. If Boeing had a bad day of that level, the Dow would be down 200 points. It's not a reason for me to be going long on the markets. And I'm not looking for excuses to go short. This is just not a reason to go long. And that's why I can't get my head around. Oh, see, bastard. See, it's down now. That's why I can't get my head around a long position. I don't want it. And this thing's already petering out while I'm talking about it. Not oil, though. Of course, oil goes up. So I'm having no luck at all on these things. What's the dollar? Oh, the dollar's down. See, that would have been a smart trade. The dollar went down, so the Nikkei goes down when the dollar goes down. That would have been a great trade. Now, the dollar is at a place where I would like to buy some more, so I'm going to add another dollar. Oh, way down there. See, I'm down $400 on that. I'm going to add one more. So I'm still down $400, but now I got two of them. And my average is now 9,374. So what I'm supposed to do is if it goes back to 9,374, I should go back to 1. So far, not very successful on these things. That's all. We'll see what happens. But so again, going over the Dow and looking at that, there was a good point about Boeing because really, there's no reason that we should be this high. This is not a good rally. It's a rally based on one stock is not a good rally. And yeah, because the dollar made a violent move and it's making everything else, spike. Don't forget the dollar is so disproportionately larger than all the other currencies that a little tiny effect in the dollar that sends money to other currencies, can make a very, very big spike because of the volume of the dollar. All part of the plan, right? Yeah, well, everything's all part of the plan. What is it the Joker said in Batman? Everybody has a plan. Oh, I forgot. Oh, whatever. Even if the plan is insane, whatever, if the plan is completely insane. Yeah, we all have plans. That's the thing he said. See if anything exciting is in the news. Or was that? Here it is. Fuel cell up 14%. Wow, that's cool. Fed stays on hold. Balance sheet unwind to start soon. See, isn't it funny how someone interprets that? Because from what they said, what is soon? It can't be sooner than the next meeting. And it doesn't. And if they met the next meeting, they wouldn't have said it that way. It probably means 2 meetings from now. It's like 3 months. Not yet, but to start relatively soon. Stance on the monetary policy remains accommodative. The labor market is expected to strengthen and inflation. So until you see 2% inflation, nothing's going to happen. And this is the key. The vote was unanimous. Underlying concerns, though, see now Ford had fantastic numbers, and they're in our long-term portfolio, aren't they? They're a dividend stock. Ford, there they are. See, now we didn't cover them because we were hoping they'd have good earnings, and they kind of disappointed. No, I'm sorry, they didn't disappoint. This is the thing I have. They didn't disappoint. Earnings were great. The market didn't take it that way. What's it say about them? Not getting a lot of credit for beating EPS, and it was a huge beat. It was like 20% beat. Pulling in $2 billion of income in the quarter. $2 billion? That's income. Income. Tesla doesn't have $2 billion in sales. This is their income. Oh, it's drives me nuts. Goldman Sachs, they lowered their guidance after factoring in the tax rate adjustment. The combination of weaker industry volume, higher levels of incentives, and commodity cost headwinds have investments issuing cautious comments on the automakers. Shares are down 20% in 52 weeks. I don't care. I like them. They got plenty of cash. They're paying their dividends. And the dividend on Ford is what? I think it's like 5%. Yeah, 5.3%. I love this stock. Okay, you know what? I totally endorse this play. So let's talk about Ford for a second. Do we have Ford in the options opportunity portfolio? That's a good question. Because we should if we don't. So we have 2,000 shares of Ford here. We bought them at 12. Now they're 11. And we sold the 12 puts. So we'll double down. I'll be very happy to own twice as much Ford. I don't care. It's crazy. I think we might already have Ford in the options opportunity portfolio. No, we don't. We have Frontier. Okay. So I want to add Ford to the options opportunity portfolio. Now, we have how much in this portfolio? We have $300,000. We have $200,000 in cash. So let's say 150, 50. Okay, let's say comfortably $20,000 will be a reasonable allocation block in this portfolio. All right, so now we're going to say, okay, we're willing to own $20,000 worth of Ford, which is 2,000 shares, right? At $11. So now we're going to look at Ford's pricing, target chart. Ford. Okay, so what do we want to do with it? We want to own the stocks. We want to collect that dividend, 60 cents, which is 5% of the price. They're 11.03, and we can sell the $10 calls for 161. Oh my God! How great is this? You can sell the 2019 $10 calls for 161. So your net call away is 1160. All right, so that's up more than 5% at call away. But that's not the end of it, because you can also sell the $10 puts for $1, actually $1.02. So $1.02 plus $1.63 is 165, 265. So you sell the 2019 $10 puts and calls for 265. You buy the stock for 11.03. 265, correct. Where are we? All right. So let me put that down, and put that down in Phil Stockwell. So we have it, because we've got to send it right over to the options opportunity people. For the OOP, this is how we make a trade in Phil Stockwell. We come up with an idea, we go, hey, let's do that. All right, so if we get it signed, we're going to have double, and the net price is buy how much Ford for 11.03, sell $2019 $10 calls for 1.63, sell F2019 $10 puts for 1.02. All right, so what's our net? That's net $11.03 minus 102 minus 163. Oops. 838. Wow. All right, so 8.38, and we certainly don't mind having 1,000 at 838. Can we stand having more? That's the question. Because if we start with 500 and we get assigned, we'll have 1,000. Oh, but it won't be 838. It'll be higher, because it's net 838. So if we do 500, we'll have $4,000 worth. If we do 1,000, we'll have $8,000 worth. That's very comfortable. Let's do 1,000. That's dollars. 8,000. 8,000. 838. See, it's not just 838 though, because you get assigned. It's going to be 838 plus the $10 strike divided by 2, 919. So it's 838, 9.19. And so if we get assigned, we'll have 2 times 919 is $18,000 worth of Ford. Can we live with that? $300,000 portfolio. It would be 5% of our portfolio. How much of that dividend? It's only $600 dividend. I mean, it's a lot of money, actually. All right, let's start with 500. Let's be conservative. So I do think the market's going to pull back. So we'll start with 500. We can always go up. Sell 5 of the calls and sell 5. Whoops. Sell 5 of the puts. So that's going to be $1103 times 5, 5515, 5, comma, 515. I'm going to change my mind again, I think. 163 times 5. 63 times 5 is 815. It just seems like so little, right? 815. Well, and 102 is going to be $510. 5 cents. So that nets out to dollars. So 5515 minus 815 minus 510, 4190. $4,190. And here's the key, and we're obligated to buy 500 more, 5,000. So if that does happen, we're into 9190, which is 1/30th of our portfolio, which means we can easily double down. It wouldn't be a problem. So yeah, I like it. I like it for a dividend payer. So let's keep it like that. Dividend is 60, 300 a year. And if all away at 10, how much is that? Another 162 times 500. 2 times 500. 81,000. Wow. I think it took a couple of years. 810 profit. So nice 20% plus return on stock you pass on to your share. Okay. So what have we done here? Boom. Boom. Picture to round it out, make it look official. Not you. Where's my charts? Damn it, I didn't do that. Let's put that one up. That's going to be an official play in the options opportunity portfolio. See how much work I have to put in just to make these one little comments? I think it's so easy. Okay. Blue, didn't do blue. And blue, that makes it official. Boom. Okay. And hit it. And there it is. Boom. Okay. So we're buying 500 Ford for 1103. We're going to sell the $10 calls and sell the $10 puts. That's going to net us into 838. And if it's signed, it'll be 919. That's how we do these on a buy right. It's a shorthand to say, look, you're laying out 838, but if you get it signed, you'll net up to 919. And then we obviously would have double the amount. It'll be 1,000 shares because it's selling these puts, and that creates an obligation should it fall below $10. All right, it should it fall below $10. We're thrilled to own 1,000 shares of Ford at $9 for the long haul. That's not a problem. That's where we're going to be. It still isn't sent out to the options opportunity people, but when I get back, because that takes me more steps. So when I get back to the regular thing, I'll send it over to the option to the people seeking alpha. Well, nobody's saying anything. Wow, is that fascinating? All right, cool. With the market doing something weird. That's how we set up a play. In short, everything's back to where it was. No changes, nothing exciting. It's all creeping up a little bit. All steady otherwise. All right, cool. So not much else going on, guys. I don't have a lot to talk about right now. Let's take a quick look at the portfolios and see where they're standing. Gosh, I don't remember where we were. 215% on the options opportunity portfolio. As we said, it's 2/3 cash, which is good. We do have a lot of positions, though, but we also have some very nice aggressive hedges. So I'm not worried about that. You can look at how little margin we're using on that, though. Only $43,000 in margin. We have $600,000 in margin. We're only using $43,000 of it. The butterfly portfolio, yawn, 263%, and just chugging along fine. Well, that's July, though. Those have to go. I'm going to fix that. We did do a butterfly portfolio review, didn't we? I'm not crazy. I just didn't make the. Oh, I just didn't fix the July put. That's all. The NASDAQ. Did I tell you guys the NASDAQ will not let us do a portfolio? I need these guys $2,500, and they decided that what did they decide? The NASDAQ said that we appear to be favoring one company over another. See, when we started, they said only take NASDAQ companies, right? They do that show every couple of weeks on the NASDAQ. So when I started, they said pick, only pick NASDAQ companies. I'm like, fine, okay, it's plenty of NASDAQ companies. I'll make sure I pick NASDAQ companies. But then, now all of a sudden they said, well, you know what? It looks like you're favoring Gilead, like, over the other pharmaceutical companies. I'm like, yes, I am. That's why it's a pick. And they're like, well, because they take money from all those people. And they're like, no, we don't want to make it look like we're playing favorites because it's their show. And I'm like, wow, you guys are insane. So all they want us to do is talk in generalities about, like, sectors on the show. They don't want us to talk about specific stocks, which is a shame, but that's the way it's going to play. I'm telling you, everything you see on TV is so filtered by corporations and staged and set up. You can't trust anything any of these people say. It's horrible. Short-term portfolio, I don't think got too much damage. 334. We in fact we boosted our positions on the short side here, and the long-term portfolio, which is where all the big money is, 218. Wow. Oh, that's interesting. Where were we? That must be up from Friday. We didn't finish them until Friday, right? I didn't get a chance to do the consolidated review yet. What? We're going to buy back the short 165 calls. Well, unfortunately, IBM went down, didn't go up. Roll it to 18140, so we got more aggressive with IBM, but didn't work out so far. All right, long-term portfolio part 1. This is part 1. Okay. No, it wasn't until Monday I finished the long-term portfolio. Sorry about that. Wow. Fortunately, nothing changed. What was that? Well, that was Chipotle. Okay. So what was I trying to find out? What I balance was? So 215. So I haven't, even though we called for a couple of changes, but I didn't make them yet. So these untouched positions, 157, what is it, 6? 1576. And now, this is only 2 days later, 1593. That's why the stupid thing made $200,000 last month. This is from Monday till now. It made another $17,000. That's amazing. This market is unfreaking believable. You have to have longs. You can't. Defensively, you have to have long position. You can't just not be in it because it just keeps going up and up and up, and eventually you won't be able to afford anything. If you're sitting on all your cash, and you just can't, you end up with things like you can't afford to buy it anymore, like Apple. Like I was thinking about Apple today. In 2008, Apple was $85. I'm sorry, adjusted for the current price, Apple was $12 in 2008 when we had the crash. In 2008 and into 2009, Apple was $12. It was $85 at the time. I was like constantly banging the table for Apple that whole time. And because you have to, you can't not play. And I said to people back then, I was like, people were like, oh, well, I only have, I lost half my portfolio. I'm like, well, good, then put it all into freaking Apple. Because of all the stocks on the market, that was the most ridiculously undervalued stock. It was just beyond. I've never seen anything so underpriced in my life. And now it's up more than 10 times. So that's gone. But that's what I'm saying. So at a certain point, all these stocks, if this market keeps going crazy, all these stocks that have really super low PEs, they're going to be gone. You won't be able to get anything with PEs below 20 or 25. Right now, we can still find some things that have 10, 12, 20 PEs. Those are good stocks. It's very slim pickings to find other things. We were talking about Silver Wheaton this morning. This is our second Silver Wheaton trade this year. We already cashed in the first one. This one is a more aggressive one, 15.25. We made so much money on the first Silver Wheaton trade that we took it off the table early. Then we put money into this one, which is a much more aggressive Silver Wheaton trade, or Wheaton Precious Metal, whatever they're called now. Exxon we took off the table. But anyway, so and here's the 4 that we do have in the long-term portfolio. Now, see, our net here, we already brought back the calls, but our net here was like 960. So our net on this trade was lower than our net on the trade we just made. But that's because we did it back in 224 when there was some kind of a volatility. Now the volatility is dead, so you get such terrible pricing for the option. But still, I'm very happy with the pricing on Ford. It's great. But it's interesting that even when it was $1 more, we got better pricing for the options at the time. No fake news. It's all fake news, apparently. That's what our president said. It's all fake news, unless it says. In fact, from day to day, he actually calls some places. He says fake, and then if they say something nice about him, he talks about how great they are. It's like he doesn't even remember what he's saying about people. And CEO looks like 48.51 has bounced up. All right, what's happening there? Stop it. That's not fun. All right, so nothing very exciting happening here. Oh, gasoline testing 162. Damn. Natural gas is back on the move. The dollar, holding more or less steady up there. All right, nope, nothing too exciting. So for Fed Day, we're getting off kind of lucky. Well, look, actually, I think probably this is we already had the pop, but it had nothing to do with the Fed. It had to do with Boeing. The Dow's up 0.5 point. These guys are only up 0.10. The NASDAQ is up 0.15, and the rest is down. This is very poor performance. Only Boeing, and Boeing is an S&P component too, only Boeing is causing this rally. Without Boeing, we would be down today. So it's not a good market day. It's not a bullish day. I don't care if we made a record high. We made it on bad premise. That's what you have to keep in mind. All right, so we're going to continue to be cautious, and we're going to continue to short until we have a reason not to. And like I said, right now, this below when it comes back below 21,650, I'm going to short it again, the Dow. And a tight stop at 21,650. But below 21,650 is a good spot to short this guy. We'll see how these guys do. They're not going to get, they might go higher into the close, so we'll wait and see. Or if the Russell comes back to 1450, I'd love to short them again. I do have more luck with the Russell than I do with the Dow, apparently. And the NASDAQ, of course, if the NASDAQ comes back to the 50 line, I wouldn't mind shorting it there too. But either way, I'm much more enthusiastic about shorts because the Boeing thing is probably not going to have legs too much. It might get up to like 10%, but it's going to pull back at some point anyway. And without that catalyst, what happens to everything else in the next 2 days? That's what we're going to need to see. But the Fed decision was basically dovish. It was good and a strong thing for the market. But I don't think it's sustainable. I really don't. We'll just have to wait and see what happens. All right, guys. So thanks, everybody, for coming today, and we will do it again next week, okay? Take care.